Hey everybody, Boris. Welcome to the crosses section for June 5 to June 9 of 2017. And the story this week is really going to be very much driven by the cable and the COM dollar crosses. So I think there are so many interesting opportunities this week for momentum trades as we start the week into June 5. First, the intra COM dollar cross that I find very interesting is the Kiwi dollar. Let me just sort of get into all the trades here on the levels. The Kiwi CAD cross is a clear breakout cross of relative strength against relative weakness. CAD very much underwater because oil just simply can't get out of its own way, whereas Kiwi is getting all of this carry trade flow into it. Resistance is 97, support is 95, and I think we broke out above this 96 level, so it suggests there's further upside, especially if we get any kind of further weakness in the oil as the week starts out. Now the next two ideas are really the cable weakness story. Which is very much showing at the end of this week and probably into the front of the week coming up as we go into our trades. Pound Swiss really very much on teetering on this very, very key support level of 124 with resistance at 126, and pound yen teetering very much at the 142 level. A break of those levels just kind of opens up a wide open trade to the downside. Let's just take a look at all the crosses on the charts and I'll show you what I have in mind. Let's start first with the intra COM dollar cross with the Kiwi CAD. Relative strength to relative weakness. You can see very powerful breakout here above 96 level. We're 96.38. Support now pretty much comes in around 95 and 97 very much in view. It may take a couple of days, could be a little bit of consolidation, but until and unless we break 95 to the downside, you really have to buy every single dip and look for the 97 as a target here. This is the carry trade flow into the Kiwi. It's not going away. It doesn't look like U.S. Rates are going to go anywhere but either flat to down, as U.S. economy definitely does not get an upgrade this week. And that just forces more flow to the Kiwi on a carry trade basis, and CAD stays relatively weak. All the way until the end of the week when we have the employment data, that could be the one big risk to the upside for the trade. Now the next trade, Pound Swiss, is a trade that we've liked a couple of weeks ago. We liked it last week as well to the downside, but now it's really coming down. As a matter of fact, it is very powerfully moving to the downside. Even as I'm closing up trade here in New York Friday afternoon, you can see it breaking the key 124 level, and the next level of support here is all the way down to the 122s. So very, very sharp V-shaped formation on a longer-term basis, but just a momentum-based trade here as we are just selling hard to the downside on this trade. Any further weakness in cable really puts this to the downside. And then, of course, the combination of two weak currencies, the pound and the yen, with dollar yen really coming in to the lows of the day. Pound yen also coming in very much very close to the lows of the day. It does have this big support of this 140, 150, but a break of here, again, there's just nothing to hold it, not even the 140. The gap is actually 39.50 to 140, and it looks very much like I said, if the dollar yen is headed towards filling its way to the gap, the pound yen is the secondary trade that could be filling its gap off this Macron bounce that we saw a couple of weeks ago. So as we close up the week, all the momentum charts are saying sell cable on the crosses and buy Kiwi on the crosses as the relative strength, relative weakness trade really comes into focus. Wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.